Good morning, good evening, wherever you may be watching this live stream. Welcome to another episode of DeFi Chill. I have my good friend Will with me this time. This should be a pretty good episode. Missed the original stream date, got sick, got under the weather. I was pretty down bad, I'm not gonna lie. But we're here. I'm feeling better. My energy levels are up close to normal, but enough to get through the stream. Let's say that. This is going to be a packed live stream. Not even gonna lie to you. We have LP reward claims that I didn't claim from last week, or maybe even 2 weeks. I think it's been like 2 weeks since I've claimed. I can't remember. Our flare rewards dropped. We had our flare drop, and then we're going to do some discovery, see what's out there in the world of DeFi outside of the Flare network, and see what we could look forward to potentially coming to the Flare network. That side of things is going to be more discovery mode. You'll definitely kind of understand or get a sneak peek into how I go about discovering newer DeFi protocols that I may not use on a day-to-day basis, but I do that discovery to get a better understanding of what the DeFi market has to offer, the new things that people are coming up with, what works, what doesn't, and things of that nature. So it should be a fun stream. But without further ado, let's get into it. Well, before we really get started, did you want to say anything?
No, good to you. Good that you're back up and running. And I'm excited to do this stream. Let's see where it goes.
Yeah. Again, I'm really trying to vibe check to see if this is something we should do on a weekly basis or I should do on a weekly basis. Really see where the community is at, how they like it, what I can change, what should stay. But yeah, I'm here to have fun. And as long as we're having fun, that's all that matters. So I want to get into the flare drop that occurred this morning. So September 2nd. This is what our 31st flare drop, I believe. So,
31st, it's wild that it's almost over.
dude, I cannot believe that we're this deep into the flare drops. I remember the very first flare drop that we received. I was excited. It was a new thing. People didn't really understand how the flare drops were going to work. There was a lot of controversy in the beginning. Obviously, we had FIP01, and we really haven't looked back. So it's amazing to be here and have received every single flare drop. Not everybody's going to be able to say that pretty soon. So we're definitely, I guess we have the OG badge. I don't know. We'll see if that's what we can be called. But yeah, I wanted to compare, my R flare rewards and my flare drop. And I'm surprised and kind of not surprised, but maybe happy that they were pretty close. They were pretty close. I'd have to say that my flare drop was just a bit more than my R flare rewards this epoch. And I don't know. I think that's a good metric, at least for me personally, to pay attention to is like leveraging my assets on a monthly basis. How much in Flare can I expect, depending on my risk, right? Depending on how much I'm leveraging, depending on um, the risk that I'm taking on, what can I expect as a return? And if I'm, and again, this is just personally, but if I'm able to accumulate via the R Flare incentive rewards just about the same that I would receive via Flare Drop, I'm pretty happy because then that means I'm close to like, or literally by off by maybe like 100 or so Flare, I'm doubling my Flare Drop for the month. I am totally happy with that. Obviously, last month, that was a really good month for me personally because, I took advantage of the arbitrage play between S Flare and Rat Flare and almost quadrupled. I think I said 3.5x my return, but it was pretty close to a 4x. Not even gonna lie to you. So that was pretty exciting. Obviously, the market did not give us the same type of opportunity, which is fine. Market isn't going to give you the same opportunities every month, but when they do appear, you definitely have to take advantage of it. So let's go ahead and get into it. Let me share my screen. Um,
I have a question for you, Ace, while you open your screen.
yeah,
Are
go
you
ahead.
choosing between the flare drops and the reward flare? Like, do you have to choose between one or the other?
No, no, you can do both, which is absolutely amazing. So, and that's another thing that I definitely want to call out. And that's the beauty of just the Flare token in general is there are so many ways to earn simultaneously that you really don't have to choose between one opportunity or another. Um, it really just depends on your risk appetite, your risk profile on the rFlare side, because obviously you can leverage your assets in what I would consider some pretty risky LPs and earn a crap ton of rFlare rewards. Or you could be, I'd say I'm somewhat conservative. I'm not all the way conservative. I'm kind of teeter tottering between conservative and straight up DGen. But you can play it like that and still earn a pretty solid amount when it comes to rFlare rewards and be participating in the flare drop at the same time, as long as you have Rat Flare being delegated. LPs, the platforms depend. It depends on how they offer this or their mechanisms behind the scenes. But um, if you have Rat Flare participating or earning in a liquidity pool, that portion of Rat Flare is also still participating or able to earn a flare drop. So that's awesome. And then,
And
of
then
course,
the
go ahead.
reward flare that you make also makes reward flare flare drops.
Absolutely, absolutely, and we'll see a little bit of that too, because I didn't claim that part either. Like I literally haven't made any claims. I wanted to do all my claims live on the stream, so we'll be able to see everything. I really haven't gotten to a point where I'm able to gauge how much my vested or R Flare rewards that are still vesting. I'm not able to gauge how much that is earning on top of what I've already earned. So that's a little bit of a grayish black box type thing, but I'm not tripping because more yield, more flare that I can earn, the better goes to my long-term bags or it goes into my DeFi bag, whatever I decide. It's actually really amazing. So let me go ahead and pull this up and I'm going to be claiming via the Flare portal. So for those that don't know, and hold on, before I really get started, I learned from the last live stream to make sure the screen is zoomed in as much as possible. So I'm trying to learn my lessons live. But yeah, so SparkDex in total, I was able to earn about 4,142.9 R flare, which is pretty good. That's pretty good. That's pretty good. And then as you can see at the top here, the flare drop distribution that my rat flare or R flare balance here has been earning turned out to be 695 for the flare drop. That's totally fine. Not really. This is probably the part that I least expect the most. So I'm not really um, expecting much of anything from this. So that's pretty cool. But we can go ahead and start by claiming that. Let me make sure my wallet is good to go for claims.
Well, one thing that is important to mention is that any reward flare that you're still making, what is it, 2% times 5? So you're still making around 15% more compound interest on that reward flare that you made by the time the flare drops end. Because
Right.
the flare drop
So
for the reward flare is the same as the for your main hook bags. As soon as you claim them, they are part of your bag. So even though they're not available, they're accruing the flare drops. So you're still making, like if you, let's say that you claim today, these funds that you're claiming, you're still going to make another 20% or 15% on top of that.
right, and
Because,
explain to the people where you're getting those numbers.
so every flare drop is around 2%. So if at this point we have five more, so that would be 10%, not APR, 10% on your holdings, on your reward flare that you already made.
Right, right. And I guess when I said it's still a grayish black box for me, it's because like I don't really pay attention to how much rat flare I've had vested from the R flare incentives. Like I barely pay attention to it. Whatever I can claim in terms of available funds, I just like almost blindly just withdraw it. I don't hit withdraw all because then you're not even getting the full WAP. You're getting like I think it's like a twelfth of it or something like that.
50, no, you
Um,
pay 50% of the locked funds.
okay, so you're paying
So
50% of it. So you would only get like
so yeah,
15,000 or so, or a little bit more than that actually.
so yeah, you would get 18,000 plus the 2,000 that are already available.
Right.
But that would be a
Versus
great suggestion for the Flare team to have a list like that, a transaction that you could go back and check how much you have claimed.
that is true.
Reward Flare,
Like a transaction history. Exactly. Yeah, that would be
like
nice.
a reward Flare transaction history and total reward Flare over like over time. I think that would be such a cool feature.
Yeah, it's the small quality of life updates that make make things the best, I guess you could say. It doesn't have to be these massive overhauls to really drive value. So it's just a little update like that would actually go a long way now that I think about it. So hopefully somebody on the Flare team is listening to this or they watch the recording and that gets added to the list of to-do items that I'm pretty sure is already long for them, but they're steady chugging away at. So I've already claimed my SparkDex rewards. That was about 4,000, a little over 4,000 R Flare. As you can see, some of that went to my available funds. The rest of it went to my rat fur balance from I think I was at 30, 34, 35,000, and it went up to 39,000. So Kinetic, I have some funds on Kinetic. Right now, I'm able to claim 2,299 R Flare from this current epoch. So I'll probably get about 1/12 of that. Now that I think about it, when I claim, and it'll go to my available funds, but the rest of this balance will go to my Rat Flare that needs to vest. So let's go ahead and claim that. And that is the big
What pool are
difference.
you on?
Go
Sorry,
ahead.
what pool are
No,
you on Spartex?
SparkDex, that is a good question. Let's go over there and take a look at that real quick. Let me change tabs because sharing my entire screen would mess this whole thing up. Um, I'm finding that out. And then let me zoom in. All right. So in SparkDex, I am in one, two, three, four, five, six different pools. One of them is out of range because we're experiencing some downward pressure on the Rat Flare or Flare in general token right now, but that's okay. I'm not going to rebalance because I have a good feeling we'll shortly move back into my range. So I'm not going to eat this impermanent loss. You again, just from learning from last stream, you only really incur that impermanent loss if you withdraw. If you withdraw all your funds, kill the pool, and then try and re-enter. You will definitely take a hit, especially now because remember, this pool started. I had like $1,000 in this at the time that I entered. Now I'm down to $808. Right. So if I withdraw, I would take essentially a $200 hit to my capital, pooled capital. I do not want to do that. So I'm going to let this ride out. I may not be earning anything from an RFLA rewards perspective, but my impermanent loss hit, given how the market is moving right now, would far outweigh whatever I could have earned in RFLA rewards. So I'm going to just chill out. And sometimes when it comes to managing your DeFi portfolio, that is the difference between making a profit and being in the red on LP positions. Sometimes it's better to know when not to take action and just chill out and let it ride out and let things market come back into your favor. But to answer your question, Will, I am in Wrapped ETH, Flare ETH. I'm in S Flare, Wrap Flare. I'm in Wrap Flare USDT zero, Wrapped ETH USDT zero, USDT zero CUSDX, and USDT zero USDC. Now, let me ask you a question. Out of all of these pools, which one do you think is my most performant pool from a fee percentage in terms of earning fees? Which one do you think is my highest earning one?
Probably the rFLR USDT zero.
I wish. I wish. This is gonna shock. This is probably gonna shock some people. My highest earning one is this wrapped ETH USDT zero pool on SparkDex. So clicking to that, I have $10, almost $11 in fees earned on this position. Last week, if people remember, I was at, I want to say like $6 or $7. So the ETH run up definitely helped, because obviously that might mean when you look at it at Dex analytics perspective, I'm pretty sure if we go back and look at the analytics that SparkDex provides, there might be an uptick in trading volume. I haven't looked. This is my first time that I've looked at my pools in about a week and a half ish at this point. So I wouldn't be surprised if volume wasn't higher than normal for wrapped ETH.
The other thing is that last week ETH was at all-time high, and then we saw a significant pullback. So
Hmm.
from those $10, like the half of the ETH part is worth less. So if we were
Absolutely.
at the same prices, you would have a higher amount of fees.
Absolutely. Absolutely. And that's also something else that you have to consider when you're like doing some pool performance type analytics is, okay, based on how the market is moving, how performant is my particular position, right?
All right. So the next question to you is, in terms of percentage, how wide is your position compared to the rFLR USDT zero pool?
Let's see. How wide is this? You're gonna make me pull up SparkDex because I actually don't remember, or not SparkDex, Dex Screener, because I actually don't remember how wide this is. Let me pull up Dex Screener. I think on my Wrap Flare, well, no, that's on Anosis. I'm pretty wide on Anosis. I think I'm like 47% wide on Anosis, and I might have tried to replicate that same uh, range on SparkDex just to compare fees a little bit better. Let me go over to Wrapped ETH. Here we go. And let me swap this.
So you can drag that tab and then share the window, not the full screen, and then just leave the tabs that you need in one screen.
Okay. I have not tried that, and I'm
Yeah,
a
that's
bit
the best. That's
nervous.
the best way. That's the best way to do it. So you create a new window with only the tabs that you need, and then you share the window instead of the tab. But it's
Okay,
not the full
okay.
screen. It's not the full screen.
Let's see. Where's the price at? Why
Much higher.
am I not
Much
seeing the
higher.
price?
Much higher.
Oh yeah, we
Scroll up.
are much higher. Here we go.
So I
Let's
think you have
see.
from 38 to 54.
Let's see. Let's see. Let's see. Where are we at? SparkDex. Um. So minimum price is 3,866. So that's USDT zero per rep ETH. My max price is 5,308 USDT zero per wrapped ETH. So that's just guessing. That's pretty wide. All right. So 38. Let's move these down or move these up. What was the exact number? 3866. There we go. And then let's grab this other one down here. I'm at like 53
Mm-hmm.
on the
80.
top.
08. 5308.
5308. Yeah, so I'm pretty wide on this.
So yeah, that changes the dynamic for the fees as well. Like it's also
Absolutely.
important to, because you would only be able to really compare that if you had the same width on both pools.
Right. And Anosis does not have a wrapped ETH USDC zero pool. Um,
Interesting.
it's the Wrap Flare USDT zero pools that I was trying to mimic. And then let's look at the percentage. Let's just give a percentage here.
Yeah, you can do that, or you can use the ruler as well.
So, okay, that's not as wide as I thought it was, but that's still pretty wide if you're trying to be more concentrated. I am 36.71% wide in this particular
Yeah,
range.
that's good.
Yeah,
That's good. And then the good thing is that you're going to be in range for a while,
for a
which is
long time.
important. Like you
Yeah,
you can be tighter making higher fees, but if you're getting out of range all the time, ultimately it's better to have something that is steady than it's just like like very tight and then you get out of range all the time.
right, right, right. And I think we had that conversation in the den a couple weeks ago with what was his name? I think it was Richard. Yes, it was Richard that we were having that conversation with. Um about how to gauge when you should run tight positions, when you should run wide positions, different strategies to run that I mean, he's been killing it. So kudos, Rich. If you're watching this, man, you've been killing it. So I hope things are still going well for you on how you've been stacking your positions. Because a lot of people don't realize they can stack multiple positions for the same pair. Like you could have a wide range for WrapDETH USDT zero, and then have a tighter, more aggressive range for that same pair. So
Or three.
or three, right? Or four, whatever. Like if that's whatever floats your boat. Whatever floats your boat is how you can stack these LP positions. And some people like to stack their positions like that. Some they do one and then they're good, they move on to another. Whatever is best for your strategy. Now, and I need to figure out how to do that. Um,
So
how I
drag
need to
that
share
tab,
this.
drag it down, like drag it down, and then when you press share, press window instead of tab. So you can share
Okay.
full screen, you can share window, and you can share tab.
Let's do learning how to use tech real time. Let's do this. Share. That's better. So then let's
Yeah,
say if I pull this down here. Oh, now I'm messing stuff up. Let's see. Why
just
can't
open a new
we?
tab and yeah, there you
There
go.
we go. There we go. Okay. Okay. That is so much better. I like that way better. So let me get my tab situated and then we will get back to it. Because that can
Oh,
be
and
annoying.
I have a little hack for you on Enosis that when we get there, I'll show you.
Okay. Well, we're headed there pretty quickly.
Yeah, yeah.
We have a lot. I have a lot of tabs open, so bear with me, guys. Bear with me. Where they all go? Okay, here we go. Learning something new every day. This is why it's best to do these types of activities with a partner or with a group because I don't know everything. You'll never know everything, right? And you can learn by working with others. So, teamwork makes the dream work. Um, Oh, I see you, Richard. My bad, man. I'm looking at chat now. I apologize. You've been talking to me this entire time. Appreciate you for being here. Yeah, no, he's been killing it with the LPs, so I'm definitely happy for him. Now let's compare. Let's go over to SparkDex. Let's pull you over here. Let's go and look at how wide my rFLR USDT zero pool is. So as you can see, I've earned $3.48, which is about where I was earning the last time we did DeFi and Chill. So let's see, I'm at 0.21101 on rFLR.
So you can measure directly with the ruler, like you don't have to set the lines and then measure, like just for the sake of yeah,
I don't even remember what my bottom was. I forgot that quick.
21 1
Yeah,
and 28,
21 1.
which is a bit above. Uh-huh.
That's close enough. And
Yeah.
28. Which now I think about it, I wanted to give myself a little bit of room just in case we decided to make some upward pressure. And it looks like I'm at about 32% wide on
Yeah,
SparkDex.
makes sense.
Me 21. Yeah, that's close enough. And yeah, about 32% wide on SparkDex from our rFLR USDC zero. So as you can see, we're just barely outside of my range on the bottom side. So that's also why I'm not really in a rush to rebalance, because if price is here, let's just say boom. So this line is the bottom of my range that I have set, and price is here. So any for whatever reason, Flair could have a nice move back into my range, but if I rebalance, I'm taking impermanent loss. I'm taking a hit on an impermanent loss unnecessarily. If you really just analyze it like that, or you want to look at it like that, because I mean, who's to say that we can't move back into this range pretty quickly? But we could also see some more downward movement. Who knows? I can't predict the future. I don't have a crystal ball on how the markets will want to move. All I can do is look at the charts, make a decision, and execute on that decision. If I'm right, I'm right. If I'm wrong, then I'm wrong. It is what it is.
That's why that's why it's important to always LP assets that you're happy to hold long term 100% into one asset, because like in this case, if you get out of range, you're still making your flare drops, you're still making your delegation rewards.
Mhm.
So like holding flare spot like 100% flare is not the end of the world.
No. And I actually ended up with more flair than what I originally entered the pool with. So I'm happy about that personally.
So yeah, I did something similar. I bought some flare at 2 cents, and then I entered the pool at when it was around 23, and then I got out of range, and then I'm happy to hold back because I was already in profit. So even though if I start rebalancing, I'm going to start experiencing the impermanent loss, but I had more tokens that when I started because I had bought much earlier and then entered the LP when the price was higher. So that can also be a strategy. So you can use LPs to dollar cost average out. So let's say that you think that ETH is going to, like, you want to take profits around $6,000. You could enter an LP between 5 and 6,000. So you're making fees while the price is moving. And then when you get out of range, you exit in stable coins, and it would be the same thing as selling and taking profits, but you add the fees and any incentives in the process.
Absolutely. Absolutely. And I hope ultimately what people walk away from with from this stream at least is that it's not about entering an LP and earning a yield, and that's all you really have to think about. There's a lot of analysis that you have to put into actually being successful at least the LP side of things. There are some parts of DeFi where it's set it and forget it. But if you're interested in more of the LPs, especially V3, Uni V3 type LPs, you have to look at these pools very analytically. Otherwise, I mean, you can get chopped up. I know some people that have had very terrible experiences on Uni V3 type dexes, and even V2, where they didn't understand the correlation of assets, the risk associated with extremely volatile assets on both sides of the pool, things of that nature. So before you enter an LP, you definitely want to make sure you understand the mechanics of being a liquidity provider, what impermanent loss actually is, because I see a lot of explanations where it it overcomplicates what impermanent loss actually is, and things of that nature. So you don't
And
want
then
to
that
go ahead, Will.
no, and then the other thing that I would add to that is have a plan. Don't just chase yield and enter an LP. In my case, I was like, okay, F assets are not coming this month. So I was already in profit because I bought that 2 cents and then it was at 0.23. So I sold a little bit, entered an LP. And then my plan is that if I got out of range, I would just exit the LP and then just hold spot because that was my initial plan. So I'm not like, oh, I'm out of range now. What am I going to do? I had an idea of what I wanted to do, and I did it. And I made like 500 flare in the 2 weeks that I was in range. And then when I exit, I had more flare than I when I started. So it's a win-win because I made the rewards, I made some fees, and I ended up with more flare that I was still planning on holding long term. So just have a plan and stick to it. If that plan is not working, then figure out why it's not working and do something about it. But don't just click buttons and then react to everything that gets thrown at your way.
Right. I mean, and especially when you're new to LPing, you might want to pay more attention to your pools. But I'm so used to doing this, I can go weeks at a time without really watching my LPs, right? Like I may look at it to update like my DeFi tracker wallets to make sure my positions are actively tracked and are as accurate as possible. But in terms of like looking at my actual pools, worrying about if I'm out of range or in range or anything like that, not really. I do all of my analysis up front. I pull the trigger and execute, and then I kind of let it do its thing. I'll claim my rewards like once a week. If it wasn't for this stream, I probably wouldn't be claiming my rewards today. At least my LP fees. Now, it was very hard not to claim while I'm laying in bed, just aching away like, oh, my rFLR rewards are claimable. I want to do it, but I want to do it on stream. Or this morning when I got my flare drop, obviously that's set to auto claim thanks to Bifrost. Shout out to Bifrost for the auto claim feature. There are other dApps that also help with auto claim, but I use Bifrost for the most part. So definitely love the auto claim feature. Appreciate them for that. But yeah, moving on. So I believe we were looking at kinetic. Did I already claim kinetic? Yes, I did. A gnosis. I did not claim that. So I actually entered a gnosis not at the same time that I entered my SparkDex pools. So it was not, at least this epoch, it was not a fair comparison one to one. But to be able to earn almost more than half of what my SparkDex pools earned in a shorter amount of time on a Gnosis is pretty impressive. So it'll be interesting to see now that we're in a new epoch how less pools on a Gnosis fares with as many pools that I'm in on the SparkDex side of things. Looking forward to seeing that. It'll be I kind of already took a sneak peek. I kind of already cheated. I'm extremely surprised at how much fees the pools that I'm in on Enosis have earned in that amount of time as well. So let's go ahead and claim Enosis. I'm at, hold on, let me exit this and let me exit that. So let me refresh real quick because I did not claim that. Um, Gnosis. Okay, I'm at 2,818 R flare earned on a Gnosis. So now I'm going to claim.
So I have something to show you. Go to Gnosis. Well, that finish, and then go to my liquidity, active positions, and then inactive positions on the right,
Hmm.
and then make sure that you don't have any pending fees on all the inactive pools, because what I realized today is that some pools I exit, and then at the end of the month I got the reward flare, or not the
Right.
reward flare, the flare drops, and I didn't claim those. So in your case, you're good. But I mean, I got like 2,000 flare just from all positions that I kind of forgot that I had.
Right. And there's actually a story to tell, at least for me, on a Gnosis. So you see these two pools right here that are out of range. So I wanted to do a little experiment inspired by my good friend Richard from the DeFi Den. He likes to stack his positions, right? So I wanted to see how much of a degen could I be if I did the same thing and followed kind of like in his footsteps. So I created two tighter ranged LPs for rFLR and USDC and rFLR USDT zero. Now, those ranges were about 0.022 to 0.025 on USDC rFLR. Same thing on USDT zero rFLR. And then my two that have been in range consistently go from 0.018 to 0.028 on USDC. For rFLR USDT zero, it's 0.019 to 0.028 as well. Now, as you can see, I've still earned more on my wider positions than I did on my tighter, more aggressive positions. But to me, it's still extremely impressive that I was able to earn $14.08 and $13.94, respectively, for rFLR USDT, USDC and rFLR USDT zero in a shorter amount of time than what my wider range LPs were trading in. So I had to take a play out of Rich's playbook, and I can see why stacking positions like this can be extremely enticing for someone who may want to just focus on one or two pairs. Now, doing that in a wider array of assets like I am on SparkDex may not be capital efficient, but if I'm just focused on, one or two, or in this case, three different assets between Flare, USDC, and USDT zero, that's pretty lucrative in a short amount of time, in my opinion. Everybody has a different opinion. Everybody has different earning goals, but I'm not playing with a whole lot of capital in these LPs because I have plans for my capital to be used elsewhere, and I don't really want to risk too much of that. But with the amount that I am risking for LPs, that's pretty impressive to me. So,
And
go
and then
ahead,
also
bro.
the reward flares are probably higher. So you got 241, and then
Mhm.
compare that with the wider range.
So, 241, does it actually still show? Let's see. Because I already claimed it on Flare Portal, so I don't know if there's any. Oh, hmm, that's interesting. Very interesting. And this can't be since the new epoch has started. There's just no way that since the new epoch has started. Because keep in mind, I did claim my Gnosis Alpha rewards already on the Flare portal. So if this is since the new epoch has started, that's actually kind of crazy.
Maybe the transaction failed. Just check in the token manage in the portal and make sure that you did claim it.
Yeah, that's a good point. That's a good point. Let's just double check. There's no harm in double checking. Yeah, no funds to claim. So
Maybe.
that has to be since the new epoch has started. And for those, and I think this is one thing that people don't realize on these dex platforms, or just these platforms in general, how they distribute our flare rewards can vary between platform to platform. So I don't know if you guys were able to catch, I don't know if it was on a spaces or something, but Thanasimos kind of gave us some detail on how Enosis rewards R Flare. They reward R Flare based on your active liquidity being traded on their decks, not just because you have liquidity available to trade in a pair. It's how much of that liquidity is actively being traded based on like your range that you set, things of that nature. So I'm not really shocked, but I'm kind of shocked because I want to know how much volume on Enosis is going through rFLare USDC for me to already be at almost 1,000 R flare. It's pretty interesting.
Yeah, that's pretty insane. It could also be a bug that it hasn't refreshed. I feel
That
like
is true.
The rFLR, they don't refresh it live. They do it like once or twice a day. So,
Yeah,
but yeah, it would be interesting to check if that's actually the case. So one thing that happens is that sometimes when you get out of range, not out of range, but like the price moves, then your concentration of liquidity is much greater because you were in a previous range and people have not updated it.
right.
So maybe that's what's happening is that at this particular price range, your concentration is pretty high, so you get the high amount of rewards. That could be a case.
Yeah, and keep in mind, I'm not complaining. I just want to make sure, this is actually what is being earned. So I know sometimes this incentive reward little feature for the pool is a little finicky sometimes. And then it gets updated, things of that nature. So I'm not going to get too excited because if that's the case, if this really is how much this position has earned up to this point with only what 2 days, 3 days into the new epoch, hey, September's R flare drop might might be pretty substantial. So we'll see. I'll keep you guys updated after the stream. We'll just continue on with the claim. So I have $8.88 in unclaimed fees. This is just LP fees. So this is what I've earned for facilitating trades in this pair. I love triple eights, lucky number. I'm feeling great already. I'll take that. So let me claim that, which means that that number, what was it, like $14 or $16 or something? Yeah, cause see, look at that. That's crazy. There's no way that there's $1 billion in Flare that I've earned. That's a definitely a UI bug, but a simple refresh, we get a goose egg. So that's how I know I've earned that or I've claimed that. Um, Delegation rewards, like I said, if you have Flare or Rat Flare in a LP position on a DEX, you still are able to get delegation rewards, Flare drops, and of course your R Flare incentives. And then let me claim this. I'm pretty happy with what I'm seeing here. Again, we'll have to check back and make sure that this 930.26 in R Flare rewards is actually correct. So I don't want to highlight that too much, but we'll see. I'll update you guys when I find out more. Um, and let me do this just so I don't forget to claim my outer range. So another stable to flare pool. I earned $6.42 in fees. I'm happy with that. It's not the triple eight or any other lucky number, but hey, as long as it's not triple six, anything but triple six, please.
That's what I was gonna say.
Oh man, that would ruin my night. Yeah, because see, this incentive, or at least this R flare position, has already gotten up to 1.16K. I mean, again, if that's true, I'm not complaining, but I want to make sure I'm looking at accurate information in order to kind of gauge my performance. So that's delegation, unclaimed fees, and then flare drop for this position. I'm pretty happy with this. Again, everybody has different expectations for what they earn. I don't have a whole lot of capital at risk in LPs, so I'm not expecting hundreds of dollars, thousands of dollars in fees, um, or anything like that. I mean, that would be nice, but that would mean I would have a substantial amount of liquidity, or at least a substantial amount of assets in these LPs, which means they're at risk. And I don't necessarily know if I want to do that just yet, especially with all the things on the horizon with Flare. I want to make sure I am deploying capital responsibly, given my personal risk appetite and how I want to kind of leverage some assets to earn. So there's that. Inactive. All right, so let's make sure we do the inactives. Obviously, there's no liquidity, no unclaimed fees because when I exited the position, I already claimed that. Yeah,
Yeah, I
because
have a feeling that it hasn't updated because that one,
yeah,
like if it's been out of range, that's been out of range for at least 4 or 5 days. So that means
right,
that you could have not made that in this new epoch.
right, absolutely. So we're just gonna chop it up to the UI hasn't been updated. Um, like I said, I didn't want to get too excited. Anyway, 582 flare and flare drops though is pretty nice. So I will happily claim that. And then 26 or 28 flare and delegation rewards, I'll take that, especially for how short lived um this position was. I'm not complaining about that. Not complaining about that. Let's go back here. One more pool to claim from. Delegations. Okay, and flare drops. Another 588 flare and flare drops. I'm genuinely happy about that. All right. So I believe that is it in terms of LPs. Just make sure. Yeah, we're good. My active positions, these two are already earning fees, so that's a good thing. Not even haven't even been an hour since I claimed, and we're back to a penny. That's not a lot in the grand scheme of things, but that just shows you how quickly these positions can accumulate fees when they really get put to work. Um,
Yeah, and the other thing is that all the rewards there that you're making, any price appreciation, any future price appreciation of Flare will reflect on those reward flare that you made. So every
right,
reward flare, it's equal to one flare. So whatever price appreciation flare has, those rewards will compound and also appreciate in price as well.
right. And because my assets have been put to work, I kind of want to see more. I want to pay myself a little bit more. We got some flare drops, we got some fees. ARPA rewards have been accumulating as I've been claiming, but I kind of want to take what I can for this for the time being in terms of R flares. So going to pay myself a nice little 2,500 in R flare rewards out of the total that I earned for the month. I'm good with that. The flare drop was pretty nice to me, so I'm happy. I'm happy with that. I already claimed my available to claim in terms of our flare rewards, so I just that's what I was doing over here. But in terms of the LP claiming rewards, that is that. And I kind of wanted to, maybe Will, I didn't know if you want to highlight anything or maybe if we could field some questions before we shift gears to our true DeFi degen roots and do some exploratory things with Euler Finance. And we'll kind of explain why we picked Euler for the first one. This isn't going to be the last time we show off how the sausage is made, but it'll be interesting. What's been your experience, well, throughout the rFlare reward incentive? You don't have to divulge any numbers or anything, but how do you feel like you did this past month?
Yeah, no, I did pretty great. I'm kind of playing a little bit different game. Most of my borrow assets are looped, so that means that I buy more flare with my leverage and then I supply it on Kinetic. So I only had some assets. I'm mostly on the USDC, USD, CUSDX pool, and I
Hmm.
made like 6,000 reward flare this month, plus my flare
Oh
drops
wow!
and everything. So it's pretty good. But I'm just kind of chilling right now and waiting. I feel like right now, like you said, any price appreciation, it's going to be greater than any rewards that you make. So I'm taking it easy just now,
Right.
just because I mean there's a lot of things coming in the future. As soon as F assets come in, I'm gonna go back into LPs heavily because I think
Hmm.
it's a great way to just make fees. And yeah, so it's good. I can't complain. Like honestly, for the amount of risk that I'm taking right now, 6,000 flare, not bad.
Yeah, that's nothing to scoff at. And I think that just goes to show that there are multiple ways that you can attack the aspect of earning a yield on your assets, especially participating in these incentives that Flare has going on that encourage DeFi activity. My method, as well explained, is a bit different than Well's method, and that's totally fine because either way, he's earning, I'm earning, he's happy, I'm happy. We share certain sentiments in some ways and we differ in others, and that's totally fine. But what I love about discussing or at least bringing up the topic of DeFi is that it gets more people thinking about their approach to DeFi. I learn, like, I know we may come off as, we know a lot about DeFi, but if I'm being honest with you, at least for me, I've learned more discussing with other people how they approach DeFi. And it may be completely different than how I approach it. But Richard, he's part of the DeFi den, and I learned something from him. Like I already knew about stacking positions, but I really didn't employ that type of strategy for me. I played with it, I experimented, I got what I could out of it, but just where I'm at, I'm not all the way comfortable with doing it like that or approaching it like that. But Richard is. And that's totally great because it works out for him and he's loving it and he's killing it. Me, I'm like I said, I'm teeter tottering between a true DeFi degen and being more conservative. Well, it seems like you're definitely on the conservative side for very good reasons. And then we have others that are just outright degen, and I love living vicariously through my full blown degens. So, um, th- go ahead.
No, and also one thing to say is that there's not one strategy that fits one every person or every moment in the market. And I think that right
Mhm.
now we're in a very specific moment in the market. So you say that I'm taking the conservative side, but I mean, I'm full degen mode. It's just that right now I'm not playing the LP game.
Yeah, the LP degen mode. How about that? Because looping
Correct.
is definitely it's definitely some degen activity. So let me put some respect on your name and not take away your degen badge. I apologize, my
Yeah.
good friend.
Please. Otherwise, the friendship is gonna end. Like that feels
Man,
like a
no,
such a
no.
disrespect, such a
I
disrespect to not to
apologize.
take off the. Just kidding.
I
All right,
apologize.
let's
All
get
right,
into
so
Euler. I've been waiting for that for a while.
we've been talking about it. We've been talking about it. Privately, of course. And it's about time that we
I lost your
actually.
audio, Ace.
Oh, can you hear me now? Let me know if you guys lose me
No,
in the chat. How about now?
unless it's me, but I can't hear you. But if you can't hear me, then it's you.
I can hear you. So let's see.
I'm reading your lips, so I can see that you can't hear me, but I can't hear you.
Okay, no, it's on. I can hear myself on the live as well. So I just wanted to make sure I was not it wasn't me. But we'll see how this goes because it might be you. But just in case, how about this? Let's remove and then add you back. Because sometimes StreamYard.
No, can't hear you.
No? Really?
Richard, can you put in the chat if you can hear Ace, just to figure out if it's me or him?
Yeah, let us help us figure this out.
No audio, Ace.
Uh-oh. How about now? Can you hear me
Now
now?
I can. Now I can hear you perfectly.
There we go. See? See? Okay. And Richard said he could hear me, but Sometimes StreamYard likes to trip out on us with that, but it's okay. Like I was saying, we've been talking about getting into Euler or just experimenting with Euler and a lot of these what you would call almost neo lending type platforms. I read about them. I watch a lot of videos about them, but I have never experimentally deployed any assets to them. So, with that being said, we are going to do this live. Well and I tend to like to do this privately because we click some buttons, we mess up, we think out loud. It can get a little messy. So if you don't want to see how the sausage is made, if you expect a clean, pristine DeFi discovery experience, this may not be the stream for you. But if you are totally fine with getting your hands dirty and watching us get our hands dirty, by all means, stick around, stick around. So let me go ahead and share again, share the window, not the tab.
Hmm.
Let me zoom in. All right. So we are on Euler. They have a lot of different products available. As you can see, they have an earn product, which I'm not fully aware what it does. But as you can see, I have about almost $40 worth of USDC in my wallet. Mind you, I'm connected to the base network. It's just super simple and cheap to use base for some of this stuff, especially when you're experimenting. I don't want to pay, excuse me, um, Ethereum gas fees because it can get expensive. Base has really cheap gas fees. So it's just super easy to experiment with networks that have cheaper fees. They have a lend type of product where just almost like a traditional lend type of protocol. We can click around in here and kind of see what we want to do. Of course, you can borrow. If they have a lend protocol, they most likely will always have a borrow protocol. Strategies is what is interesting to me, but I'm not opposed to starting with any of these other ones. So, which would you like to start with? I think strategies sticks out to me the most. Lynn Borrow, we kind of might know a little bit more about that, but it to me, it's either strategies or this new earn protocol because this is brand new.
Yeah, why don't we do $5 on each or $10 on each just to kind of like test it out, and then maybe next week or next stream we can report back on our findings.
Yeah, let's do it. Let's do it. All right. So earn deposit once, earn passive yield across multiple professionally curated strategies. All right. So I have USDC in here. What happens if I click this? Wow, they only have $22
Yeah, so maybe
deployed
not
here.
that one.
Probably not this one. Um, I mean, maybe. I mean, who knows? Who knows? It's super high risk if you throw a lot in here, but if we're only throwing like $5, I'm not complaining if I lose $5. We're here to learn.
Yeah, I don't think you're gonna lose them, especially I don't know. I just don't understand. Like I'm the least experienced in this product, so I'm gonna trust your
Right.
judgment.
No, it's all good. It's all good. Let's read first because reading is fundamental. Um, so looking at manage, what does this mean? So vault status managed. Managed vaults are governed by trusted curators who actively manage risk and strategies to optimize yield while maintaining security. Okay. Who's the capital outlay? Okay, so it looks like the Euler DAO is who's managing this, I'm assuming.
I guess.
And so far, the performance fee, they're not charging you to manage any type of capital in here. Maybe it's because they're trying to bootstrap it because it is such a new protocol. So far across the 7 days, the performance or the APY has been 3.35%. Um, and it hasn't been 30 days or 90 days. Because like I said, if you follow Euler on X, you saw them announce the launch of this product. So I don't even think it's barely been a week that this product has been out, which makes a lot of sense as to why there isn't a whole lot of supply and liquidity in this. Um, but again, all right, let's just read on. 3.35% compared to a high yield savings. That's, I mean, it depends on where you're at, but that's kind of like below what I'm seeing right now for a high yield savings. So again, comparing between DeFi and traditional finance, a high yield savings might be more appealing currently at the current stage of this product. So don't judge it in its entirety because it's still brand new. Um,
Yeah, but if it does seem like the risk for that API might not be worth it, because in that case, I might just go to Aave or one of the traditional borrow and lend and get a
right.
higher APR, and I know what I'm getting into. Because, like, definitely DeFi is riskier than traditional banking,
Hmm.
and the reason that we're doing it is because there's a higher reward. If you're not getting a higher reward than you would in the bank, then just keep it in the bank and forget about it.
Yeah, and that's just us being honest. Um, just scrolling through this, yeah, there's not a whole. I'm shocked that there's not a whole lot of liquidity in this earn protocol right now. So maybe we don't. Maybe we revisit the earn aspect and let it garner more liquidity and be able to judge the risk versus the reward a bit better later down the line.
For sure. And the other thing is that, I mean, I feel like we're using this not just to click another button, but to actually understand how it works. And if you're only going to deposit, then like we already know how that works. Like we're not
Right,
finding out anything.
right. So maybe it's better if we start with strategies. All right. So where's my pen? Oh wait. Effortlessly leverage restaking, farm points, arbitrage rates, and more, all with just a few clicks. The total borrowed in this protocol is 1.39 billion. The total supplied is 2.86 billion.
That's
And this
wild.
is on base. And that's another thing. Maybe we should have liked maybe the liquidity is different depending on the network you're on. Oh yeah, that makes a lot of sense now because when you switch to Ethereum network, there's 35.9 million USDC on the
Right.
supply side, and they're earning
Mhm.
11.2%.
Yeah, press those on the API. Let's see what it does, what it's saying. Lend API 9.34, rewards 1.82.
Rewards boost, they're only boosting you by zero point zero 0.03. And then the supply, just simply supplying equals out. Well, I guess that's all of that added together. So you end up walking away or you end up earning 11.2% in total between the lending APY, the rewards APY, and the rewards boost. Interesting.
I really wonder how they do this. Like, I really wonder what's the process. Like, where's the yield coming from?
Right. Maybe is there has to be some type of incentives. And then this REUL, so R Euler, I'm guessing, is that their like reward token, and maybe they're just incentivizing it heavily with that. But at
So
least it
go
it
to the lend
denominates
tab.
that
Let
here.
Yeah. So go to the lend tab. Let's see what's the difference. Like what I'm trying to understand. So USDC, yeah, you're getting the 9.58. Go to the API and hover there. There it is. So yeah, you're getting the same 9.46. So I don't understand what's the difference between just lending and the earn tab. It seems like you're getting the same, like you're lending to the same pool. Just seems like the earn is doing something else with that capital.
Right. That's a good point. And it's 90% on utilization. So I mean, this is being heavily used. They even have like RLUSD being lent out on this platform. So for those that don't know, that's Ripple USDC. That's Ripple's stablecoin. So to see that, well, I guess I'm not surprised. I mean, they have it deployed on Ethereum, so why wouldn't Euler support it? And you're earning 11.5% on that. I
So yeah,
really
the
want to know the
incentives for that one
difference.
is much higher. All right, so go to borrow. Let's see the rates there.
Yeah.
So yeah, you're paying.
Hmm. I
So
mean, you're not really. Go ahead.
you're supplying USDT and then borrowing USDC.
Yeah, the debt asset, I'm guessing. So I guess it allows you to here, let's just view the vault. Let's see. What does it do?
So my problem with these platforms is that like there's a lot of stable coins that I've never heard before, and that
Yeah.
kind of makes me a little bit worried.
But so
So
PTs,
that's the principal token, no?
I don't know if it's
Because
principal
what I
token
understand,
or point
what
token.
so what I understand from these platforms is that you actually get your yield separate from your like capital. So if you hold it until maturity, you get the full API for the main token, and then you can trade the principal token. I don't know if Euler is the same as the other one, is the
Was that Pendle? Yeah.
Pendle.
I mean, they all kind of operate that way. So what is Frontier Yield Fi? Let's look at this. An isolated market dedicated to the yield fi ecosystem. Frontier markets are not actively risk managed. Please ensure you are comfortable with the risk exposure before lending, which kind of makes sense because the maximum annual return on equity, Jesus. If I'm reading this right, if you're holding if you're holding this PT or maybe this YUSD is what it is since it's the debt token, I mean, does that not mean you're like fairly underwater on your position?
Seems like it.
So why are people holding this? Why is there $1.43 million in liquidity?
No idea. No idea. But yeah, so having read the Firelight white paper and
Hmm.
understanding that each vault is going to have its liquidity token, like liquid stake token.
Hmm.
So I don't know if each vault has its own stable coin. So it's not that it's not USDC, it's just that it's the vault's name USDC, and that's why there's so many stable coins there.
Right, right. And keep in mind, like vaults and the way that Firelight is probably going to use them and how Euler is using them could be slightly different, right? So, because I don't think Euler is securing any type of protocol or anything like that. I don't think there's any type of ESS type of mechanism here. I do, however, think these are almost like leveraged loops, if that makes sense. At least that's what I'm garnering from this.
Yeah,
Because
there's some
why
that
would I?
says like max multiplier, so seems like yeah, they're like looping and maximizing the yield or something.
Right, but the higher the the multiplier, the higher the risk you're probably taking too.
For sure.
I mean,
Yeah,
because
I don't understand this.
I mean, hey, we're gonna work through it. Whether we walk away with a clear understanding or not, the whole point is like this is what you kind of have to do to discover what's best for you in DeFi and what's not, right? So I'm curious as to why. So they're not even like rewarding you for supplying to this collateral asset anymore. So you supply Frontier or this PT whatever. Because this is a leveraged loop, are you automatically borrowing YUSD?
No
And then
idea.
you can take that YUSD and go do something else with it?
Okay,
Like
go to B Vault and see what it says.
B Vault.
No, no, like yeah, there. Like hover over. YUSD and then B Bolt.
Oh, Vault. Okay. I clicked it. There we go.
All right, so that is giving you supply API,
But like
but
it's not being used. So and it's not curated. Okay, okay, okay. So what's the difference between so there's no risk curator. These vaults do not have an active risk curator and are not actively risk managed. A vault governor, such as Euler DAO, may still have the authority to add or remove collateral assets or adjust parameters, but these markets are intended to operate independently. Lenders and borrowers should use them at their own risk. So if I'm just reading that, I wouldn't touch this with a 10-foot pole, at
yeah,
least this vault.
yeah. All right, let's figure out the strategies and see, then decide what we're gonna do.
Right, 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 right. Okay. Interesting. Let's
So, so yeah, that USDE, I have no idea what that is.
right. Can I find something that I'm I just want to dip my toe. I don't want to like just dive in, right? So like can I
Correct.
find something that looks familiar to me?
Well, we should be looking at base, just so we see what it is, because it is
Oh yeah,
very
that is
different.
true. We are on Ethereum. That is a good point. And I do not want to pay those fees. But even still, there's several assets that I don't know
So
anything
that
about.
USDC, Coinbase, Bitcoin could be one of the more like,
Safer, quote unquote.
I guess, or the USDC Euro.
Yeah, that's interesting. And they are paying 34%. Let's how much liquidity is in this? Only half a mil in liquidity here. We're at a million here. Let's look at this one. Let's look at the USDC Coinbase BTC. And it looks like I only have to deposit USDC. At least I'm reading it. I
So
think I'm
so
reading it right.
put one and see what happens. Like, don't deposit, just, yeah, and then multiply, do like a 2x and see what happens.
It's thinking.
Yeah.
Okay. So I'm long USDC, short BTC, which I don't think how can you be long a stable coin?
Borrow? No.
Well, like I would that means I'm lending it and I'm borrowing the
Yeah.
BTC.
So I think what's happening there is that you're lending USDC and borrowing Bitcoin against it, and that's why you're shorting Bitcoin.
Right, right, right. So liquidation Oracle prices at 62 cent USDC. I mean, that would mean USDC is massively depegged then.
For sure.
But I mean, my health ratio is decent, I guess. I'm not too far off from two, which is where personally I like to remain. I like to be as close to a two collateral health factor as close as possible. But that's just me.
Yeah, I don't think you can change that here.
No, no, no,
Well,
no.
okay, so move the multiplier and see what happens with the health factor.
Yeah, let's do like a six, or oh, I can't even do six with one. Well, okay, but 4.53. That helps us get the picture though.
Yeah, so that's 1.02.
Okay, so the more you kind of move that multiplier up, the lower your health factor can be based on how much you're providing in collateral. But okay, so like if I do 10 USDC instead of just one with the
No, I think
same
the multiplier is what changes, because like you're just changing the amount that you're increasing your leverage, but you're not So yeah, the multiplier is what would change your health factor.
Okay. Yeah, it looks like it looks like you're right. Okay. So then if I do 2.775, what does that change it to? Just experimenting. Either way, I'm not really complaining because this is all for experimental purposes. Yeah, it moved it
So
back
yeah,
up to
125.
1.25. Okay. Um, I'm not really complaining about that. Let's do, but I may knock that down to 5 instead of 10 because we may want to play with some other ones. Okay. Let's do this. Accept some terms. Um, okay. Okay. I mean, obviously, if you were to actually be putting a lot of collateral at risk, you might want to actually read those. But we're some degens right now. I'm only risking $5. It is what it is. Let me accept the transaction. Confirm. Okay, so let's look at this. We supplied $5 for one position. We're borrowing 0.00008 Coinbase BTZ, which is worth
Almost
$8 and 80.
2x.
Yeah, it's almost 2x basically. And then we're making a swap from that BTC to USDC, verify the swap and deposit, and then we're enabling collateral.
I don't understand why you would like get liquidated. Like if you're borrowing crypto and then the prices go up, then you owe more. Like I don't understand how this is working.
Right. Like I could be
Like if you were lending Bitcoin, then that would be a different story because then you would like borrow stable
borrow
coins and then buy more
USDC.
Bitcoin. So you
Right,
are
right.
shorting Bitcoin, but I don't understand the liquidation price. Like that
Oh, when
doesn't
it
make
fell.
sense.
Oh, okay. I need to increase my slippage. Um, where even is that? Okay. Let's go back and try this. Now, this to me seems extremely risky, especially in the bull market. If we're understanding how this works. And where were we at? $5. We did 2.77. Whatever. I would not recommend trying this at home. Just saying. Because if you we were if we're understanding this correctly, and given the market sentiment right now, I don't know if I would want to be short Bitcoin right now, personally.
So what one thing once you finish this, I would like to see if you can actually do it the opposite. If you can lend Bitcoin and loop it.
Borrow
So go down,
stables.
then scroll up on the right side. Yeah, scroll up there. And then where it says USDC, can you change it? No.
No. So it's predetermined how the vault works. But see, this is so we click strategies, right? Yeah, we click strategies, we hit view details. It takes you to the borrow tab, pair details. So yeah, the collateral is USDC and the debt is Coinbase BTC. So that means you're borrowing BTC against USDC. You're shorting Bitcoin basically against USD. That is not smart, actually, given the market sentiment. Like I just if this was real and I was working with a lot of collateral and I just wasn't experimenting for shits and giggles, I would not enter this personally. I don't know about you, Will.
So my question is, I really really don't understand because like if you're in strategies and if I didn't know better and I saw that, I would feel very comfortable adding it. I would be like, okay, unless my USDC goes to 67 cents, I will never be liquidated. So I would just deploy capital. So I don't
Right,
know. I have
but
a feeling that there's something that we're missing.
well, let's figure out if we can, if we are missing something. I mean, I'm view details. There's not a whole lot to read, honestly.
Yeah.
Um,
So on the right
More
side, go to
info.
borrow instead of multiply and see what it says. Yeah, same thing.
Yeah, it's literally the same thing. I mean, it's more spelled out to you, I guess, on the borrow instead of just the multiplier. But
Well, I think the multiplier what it does is that it like loops it.
yeah, it's like a
So when
leverage
you
loop.
like
It's
if you go,
literally a leverage loop.
but I don't
Go
understand
ahead.
why you can only do it
One
shorting the
way.
crypto, not yeah, I don't understand that part.
Yeah, I would definitely agree with you there. I want to see what this more info does. What is this? Okay, that's just telling you their oracles. We know how we feel about chain link stinky linkies. So it just yeah, this is going to take me some time to get my head wrapped around on why you would even do this.
So now go to portfolio and see what it says on the top.
Health score 1.26, LTV 63%, loan to
Yeah, so
value. Okay.
you lent $5 and now you have $13. So that's the 2 point something multiplier that you did.
But that's in my borrowed asset, which is Bitcoin.
No,
So
but your collateral is 13.54, one step down.
yeah, right here, which only
Yeah,
gave. Yeah, I guess that makes sense. Only gave five
two
dollars.
no 2.35. Like that's the multiplier that you got.
Yeah, I'm saying that makes sense because I only gave $5. So the multiply, like it makes sense to what the multiplier is, I guess. So okay, so then do I just would I withdraw this? And but then
No, you would pay repay,
yeah, you would repay first.
swap collateral, max.
Uh,
On the bottom it says the bar percentage of
oh, here we go. Here we
debt
go.
to repay. Uh-huh. Yeah, this is very weird.
Yeah, I'm not liking the feeling that I'm getting, and not saying that this is a bad product. I just wouldn't use it in this current market condition. Like this particular vault, I would not be interested in because I would not want to be short BTC just yet.
Yeah. Yeah, the top of the market sounds amazing, but right now kind of weird. But still I feel that I would feel more comfortable doing it manually and having full control of what's going on than putting in a
Have,
plan. I don't know. I rather do things manually and like have control of what's going on than something that does it for me. And like I said, I understand perfectly what's going on, and that makes me raise an eyebrow. But if I didn't understand it, I would be like, oh yeah, this is perfect.
yeah, you would be blindly doing it, and that's the last thing you want to do is just blindly do anything. So now that I've repaid, okay, I'm back to my $5 or $4, and I lost 5 cents or oh,
You
okay,
have it in Bitcoin, yeah.
yeah, you have Bitcoin. Okay, this is really weird and interesting at the same time. It's weird because I'm not used to it. It's interesting because I want to learn how it works.
Yeah.
Uh, I don't know, man. My brain is a bit all over the place right now. It's a little scrambled. And we've been going for about an hour and a half. So we might call it here. We might call it here. But
Yeah, let's check the other platform the next week or when next time we meet. I'm curious now and I wanna like check it out and read more about this, how it works, because this seems like it only would work in one part of the market cycle, not anytime.
right. Or you'd have to really search for vaults that fit your thesis for the current market, like where the market currently is. Like you can't just go on the strategies page, pick a random vault that has a pair that you like, and then deploy capital and expect to be profitable or expect anything good, especially in the vault um that we just kind of experimented with. If we didn't know any better, we wouldn't have known that we were short BTC, right?
Or
And
understand what that means at least.
right, or understand what that means. And then couple that with where we personally feel the market is at. Do we even feel comfortable shorting BTC? And the answer was no. So that vault would not have been, or that strategy would not have been appropriate for us at the time. So again, even in discovery, you have to you have to analytically think through all of this. Like you can't just press buttons and expect to be successful with DeFi. Thankfully,
Yeah,
we only played with a small amount. We only played with $5, right? So if we would have lost that $5, it is what it is. Water under the bridge. But if we were to be playing with a lot of capital, coupled with not knowing what the hell we're doing, that spells disaster. So
for
it's
sure.
always it's always good to kind of play with small amounts, but while you're trying to get your head wrapped around something, but you can't be scared to try new things ultimately. So you got to balance it. Don't be scared to try new things, but DeFi responsibly, experiment responsibly. Don't don't YOLO into something that you don't know anything about. So, with that being said, Will, do you have any closing remarks for tonight's stream?
No, that was great. Thank you, Ace, for inviting me and looking forward to try new apps next time.
Yeah, it'll be interesting. Hopefully, people didn't get too disgusted with how we make our sausage or how we make DeFi magic happen. But this is the process that we go through, at least together. We kind of click around and bounce things off of each other. It gets kind of unorthodox because most of the time it's a new platform and we don't really know what we're doing. We're exploring, but that's what it looks like. We got to see what you could potentially expect to earn from a LP fee perspective, R flare rewards, and flare drops. That was fun. Now I need to go back and actually update my DeFi tracker because that's the one thing I didn't do on here. I always forget that because I feel like that's an administrative process that nobody wants to sit and watch. So I never really do that on stream, but maybe I'll do that next time just so people can see the full flow of how I manage
Yeah, maybe
things.
maybe maybe before the stream we do the tracker and then you show the performance of the pool with the tracker because like $13 doesn't really say much and the
Right.
percentage and the API that you're making it's a better. So maybe for the next stream you update your pools, then you claim and then you show each pool the performance that they're getting, which
Yeah.
in
And
Spartex is kind of hard to do.
absolutely. Absolutely. No, that's a good point. And I'll definitely incorporate that feedback for the next one. So I hope you guys enjoyed the stream. Thanks for stopping by. And I'll catch you in the next one.
All
Peace.
right.